There we go. We should have sound now. We should be good. There we go. We should have sound now. Perfect. All right, I checked on my phone. We're good to go. All right, we got 14 individuals that are willing to learn and willing to study the stock market. So that's perfect. All right, so welcome. So the first thing that I want to do is we're going to look at ES and NQ, and we're going to talk about what to expect. Okay, so the first thing is that we opened within the range. Anytime we open within the range, we are expecting that we can pull back to any one of these Fibonacci's, 236, 380, 250, 618, etc. We can pull back because there's not a convincing amount of buyers that are willing to buy above this high just yet. That doesn't mean that we're not going to break through the high, but it means that we're going to take some time to consolidate. So what I recommend doing here is if we can pull back and if we can make a base around here, and if we can have some bullish confirmation, that's when you want to kind of go high. Or if we can break back through this opening range bar up here, then that's a confirmation that you want to go high. But for now, this open is very neutral. There's not a significant amount of buyers that are willing to buy above this price. So that means we got to wait for either the break above this high, or we got to wait for the pullback of some of this Fibonacci. So, I was hoping that we were going to gap up because I have some swings on. We're going to talk about my swings. And but hey, by the open tomorrow, we can definitely be gapping up. A lot of times buyers, they want a better price to buy before they push for the next leg up. All right, so let's look at NQ. Let's see what's happening in NQ. So NQ is exactly the same thing. Our open was very weak. We opened within the range. So we have these Fibonacci levels over here to act as support. And if we can get back above the high of the opening range, then we can definitely squeeze higher. So pay attention to when we break above this high. If we can break above this high, you can put a stop loss below the swing low and play for that. But in general, these gap ups, these gaps that are inside the previous day's range is very difficult to trade because it's going to be very choppy. And a lot of the times the volume might come in the overnight when you're sleeping. So in this case, if that's the case, you really want to have a limit order. You can put a stop limit order. So for example, you can put a stop limit order. Let's say you want to get long up here. You put a stop limit order below. Sorry, that's a short position. I'll put the long position on. So you can have a stop limit order above this high, let's say, and you can put a stop loss below this 236, and that's how you can get involved in this position. So not every time we're going to gap up or we're going to have big moves. Sometimes we're going to be digesting and consolidating. And to be honest, it's good to consolidate in general for the trend because we need other buyers to come onto the train. We need more buyers to be willing to purchase here, here, and here in order for us to have a great move up. So this is very healthy in general. All right. So let's talk about my swing trades and let's talk about how you guys could have got involved in everything. So the first thing I want to talk about is I want to talk about Tesla. So Tesla, I called this out on a few casts back, and we had this inside hammer here on Tesla. And all I did here was with this inside hammer, I got in a little bit below the low. So what I like to do, a little bit above the high, sorry. I like to get in on the momentum, and then I put my stop loss on the opposing side like this, right? So what I do here is I use a stop limit order. A stop limit order only fills me when the price breaks through a certain level, okay? So we don't want to get filled unless the price is breaking through the high of this candle. Because when the price is breaking through the high of this candle, we can see that some shorts are going to get squeezed. Some dumbasses have been shorting Tesla for a long time, even though the trend is very, very bullish. You're shorting Tesla, you're shorting stocks that are in a bullish trend, you're playing a losing game. Very, very straightforward. You're playing a damn losing game. You have to play with the trend if you want to make money. If you want to be a celebrity and you want to call the top, you ain't going to make money. You might be right once in a while, but that is not going to be a long-term sustainable strategy. And what I'm here to teach people is I'm trying to teach you how to make money consistently. That's what we want to do. We want to make money every single week. We don't want to be in the Hall of Fame for calling the top. yeah, we might call the top in Tesla one time, but then we're going to lose 100 other times after that. So let's not be that type of person. And there's a lot of people on Twitter that are trying to call tops. They're trying to call bottoms. We don't need to play that game. We play with the trend, and we play with the trend until the music stops. Okay. So let's talk about this position that I took on Tesla and how I made 30%. So let's zoom out on Tesla first. Okay. We're just going to zoom out as far as we can go. Okay. So if I were to ask you a question subjectively, straight up, is this stock in an uptrend or a downtrend? You know, feel free to comment in there. Is this stock in an uptrend or a downtrend? And any person that has any basic knowledge of the stock market is going to tell you that this is in an uptrend. And let me tell you a little secret. When a stock is in a trend, it can always go higher. When it's in a downtrend, it can always go lower. So do not be that person that's trying to call tops or bottoms. You're playing a losing game. If you were trying to call the top on Tesla, you've been wrecked. If you were trying to call the top on Amazon, on Netflix, on Google, you've been wrecked. Do not try to be that person. I know it sounds mystical and it sounds sexy. I'm going to call the top. But guess what? You're not going to make money. So are you here to make money? Or are you here to have fame? That's a question you need to ask yourself, okay? I'm here to make money. That's it. I don't care about friends. I don't care about popularity. I'm here to make money, and I'm going to teach you guys the right way to do it. So as you guys know, one of the strategies that I'm running right now is the inside bar on the weekly chart. And the reason why the inside bar on the weekly chart works is because we have a consolidation on a weekly time frame. When you have consolidation on a weekly time frame, that means for the last 5 days, somebody got screwed. Somebody was in danger. Somebody tried to short, somebody tried to go long, and now they're in trouble. So I look for the weekly chart inside bars to take advantage of traders that have been trapped. So we can clearly see here on this inside bar, what happened? On this inside bar, there were shorts. They were shorting. Look, we have the wick was all the way down here. Okay. At this point, when the shorts were shorting, they were laughing. They're like, you know what? I got Tesla at the high. And they were laughing. They thought that they had the absolute high on Tesla, and they already put their pre-recorded tweets and they were ready to say that I got Tesla at the very high. But guess what happens? By the end of the week, Tesla closes with a hammer bar. And then guys like me, we come into the market and we say, okay, what's happening with Tesla? You know what? Some of these shorts were screwed over right here. And guys like me come to the market and say, you know what? I'm going to go long right here. I'm going to put a stop right here because I could see that the shorts were down here and they're going to get screwed. So where are the short stop loss going to be? It's going to be here. It's going to be here. It's going to be here. So this is what happens. This is what happens when the shorts have to cover. And I want you guys to pay attention to that very, very, very closely. The shorts have to cover here. They have to cover here. They have to cover here. And guys like me are just making money all the way up. Okay? So I made close to 30%. I closed my position last week. I didn't have to close it. I could have held it a little bit longer. But right now, I'm trying to build a cushion for the rest of the year. I was able to close it for about 31, 32%. Let's look at the 5-minute chart. I'll tell you guys how I covered this position, okay? So we had, on the 5-minute chart, we had a gap up. So I'm going to tell you guys some stuff that you shouldn't be listening to because you know what? Not everybody's going to tell you the things that I'm going to tell you, but I'm going to tell you because I care about you guys. I want you guys to succeed. All right? Nobody should be hoarding information. Information should be free to the world. Okay? So we gap up. Anytime we gap up, we expect that this close is going to hold. Okay? Because what's happening here when we gap up? When we gap up, there's a lot of trap shorts. Okay? So that's why we have this assumption here that this close is going to hold. So this is what we call the gap and go play. And the way we do it is we take the Fibonacci from the high of the closing bar up to the first 5-minute bar before we start retracing. And you see we pull back near the 50 and we rip. So one of the levels I like to use, it's one of the levels that I've studied for a long time. It's called the 450 Fib. Look at that. Do you guys see that? You guys see that right there? You guys should give me some respect for that. Because that 450 comes from back testing. Nobody's going to talk to you about the 450. No Elliott wave, no wave Elliott, no David wave, Michael wave. LeBron wave is going to tell you that 450. That 450 comes from me putting my ass on the line and studying every single damn week to get that 450. That's where that 450 comes from. So when you guys trade my systems, 450 is a limit, the Fibonacci. It's not a Fibonacci. It's a level that I created for myself because I see that it works time and time again. And as you guys can see, I didn't put this 450 on until we just came on this live stream, but I knew, you know what, that looks like a 450, right? So the way that we play the 450 gap fill is we take a 450 gap fill on the 450. If you're very aggressive, you put it right here on a 618. If you're very conservative, you put it below the closing bar. If you go below the closing bar, basically you're telling me that you want to take a swing trade, right? But if you want the immediate momentum right here, you get in on the 450, you put the stop right below the 618 like that. Fix that right here, okay? And that's it. If you ride this thing up to the highs, that's 6.76R. If you're risking $1,000, that's $6,760. Okay? So the win rate, it doesn't matter. The risk to reward matters. Okay? If you can take a trade and win between $3,000 or $4,000 on a trade and your risk is $1,000, you're good to go. Let's look at this. Let's pull up my book here. Let's look at the win rates that you need. Okay, let's go down, blah, blah, blah. So let's go find the win rates. This is very important. The win rates is what matters, guys. Stop being married to, oh, I need a good win rate. The win rate is not what matters. It's the risk to reward that matters. How much do you make? Okay, because the more you make, the less times you have to win. Very, very simple. So I have so many examples on this book. Too much. I really tried my best to give you guys the knowledge here, but let's get to the risk management. Where the hell is the risk management part? Time frame alignment, trade management, blah, 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 limit orders, trade. Okay, here we go. All right. So let's look at this together. Okay. So this is the risk to reward that is required. And then I'm looking at over 100 trades. What win rate do you need to have in order for you to make money? Okay, very, very simple stuff. Okay, it's just like if you're flipping a coin. When you're trading, guys, I want you to think of it like you're flipping a coin. Trading, you're not going to be right all the time. And if you think you're right all the time, you're going to be in for a rude awakening because the market moves in cycles. Okay, and sometimes the Bollinger Band is going to be fancy and it's going to work. Sometimes RSI divergence is going to work. Sometimes double bottom, double top is going to work. Sometimes blah, 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 blah is going to work, but it does not work all the time. Okay, and that's what I need you to understand. So what's more important is, can I find a strategy with a good risk to reward? Okay, that's what I need you to think about. Can I find a strategy with a damn good risk to reward? So let's look at the risk to reward, okay? We have 1.5, we have 2, we have 3, and we have 4. So this is the general guidelines I use for day trading. When you're swing trading, you can go for whatever. When I was trading Tesla, I went for 4R. Okay, so I locked in my 4R on Tesla and I'm good to go. So let's start off with 4R. So if I'm going for 4 times my risk on every single trade, I only need to win 21 out of 100 trades in order to make profit. So I only need to win 21% of the time. Okay, let's go to the other side. If you're going for 1.5, then you only need to win 41 out of 100 trades. Obviously, the higher you go on the scale, the less win rate you're going to have because you're asking for a lot more. So the question is, where are you on this scale? Where are you? Anyone that's been trading for a significant amount of time, please comment and let me know, where are you? What is your average winner in terms of your profit? In terms of your loss. Are you making 1.5 times your loss? Are you making 2 times your loss, 3 times, 4? Let me know where you guys are at, because this is what matters in trading, because the more you can make relative to your average loser, the less times you need to win. And that is the biggest secret in trading that people don't want to talk about. People will rather want to sell you something that has a negative win ratio, or risk to reward is negative. So let's say I risk $100 to make $50. Obviously, my win rate is going to be 70 or 80%. But am I going to actually make money doing that? No. Okay, so that's the lesson today. All right, let's go back to the chart. So I have a confession on MU. I fucked this one up, and I'm very, very sad about this, and I'm hoping that I get bailed up. So with MU, I did the same thing. I had this inside bar here, and we had this bearish bar, and I wanted to get long right above these bars because I knew that there's going to be a squeeze, okay? Because there's a lot of shorts. So I did get in right here. So I got in on MU at 74.07, and I had a stop loss at 71.56, and my profit level is 84.22. So in general, I'm supposed to go for 4 times my risk, and I got a little bit complacent here, and I did not put 4. 4 is my number for swings. So let's bring this down to 4. Okay, let's bring this down to 4. Okay, I have the lock on here. So let's bring this down to 4. So 4 is right here. So that's 401. I had it. Okay, there it is. So the price that I was supposed to sell MU was at 84.12. Let's look at the 5-minute chart and let's see what happened. So I got a little bit retarded, to be honest, and I had my target at like 84.22. Look at MU here. It goes to a high of 84.14. If I was managing this properly, I would have sold it at the very high. But I was trading multiple things that day. I was trading DraftKings where I made some money, and I wasn't paying attention, guys. I'll be honest with you. I wasn't paying attention. And I was supposed to get out right on this damn wick, because you guys can see we had the weekly bar set up, this inside bar here. We pulled back and then we ripped, and that's my play. And unfortunately, I didn't do a good job. And I'm very, very disappointed in that because we had a big drop. And now, instead of being up 4R and MU, I'm only up like 1R. And I'm really, really disappointed in that. And hopefully MU can squeeze a little bit higher and it can pull back and push through. But if not, that's something that I'm going to kick myself in the ass for the rest of the year because I made a mistake there. So, you know, full transparency with you guys. I'll tell you when I mess up, and I'm trying to show you guys that. Okay, let's look at DraftKings. So DraftKings was a big winner for me on Friday. So let's talk about DraftKings, right? So the first thing with DraftKings is that I identified that the previous day, so this is Thursday, the previous day on DraftKings was an inside day, right? So this is the Wednesday range. You see how the Wednesday range, the highs here and the lows here? And then on Thursday, the DraftKings range was inside, okay? It was tight. So let's go back to here. Let's look at, oh, got a lot of requests over here. I got to look at that. But anyways, let's look at this, how I call it out for you guys. And I want to teach you guys how to trade this. I think it will reserve people took earnings, profits, blah, blah, blah. I have one too. Good luck, brother. I really, really hope it works out. But let me share you guys the process that I'm trying to implement going forward, okay? All right. So here is, all right. So DraftKings was one of the top picks that I had for day trade, right? So the way that I do that is I go to Thinkorswim and I use a scanner. So let me pull that up. I use a scanner in Thinkorswim, and that scanner tells me every stock that has closed as an inside day. Okay, so it's going to take very long to pull it up, so we'll get back to that after. But what I do is I go to the daily chart here, and I look for the stocks that close with an inside day. Okay, so on Thursday I said DraftKings closed with an inside day. So DraftKings closed within the previous day's range. And why is that important? I trade shares. I don't trade options. I trade shares. But why is that important that DraftKings closed inside the previous day's range? Does anybody know? Okay, so I gotta pull up the stats here for you guys. What is that thing called? Miro. So let me explain to you guys. Put inside bars here. Okay, so this is why. So why do I trade inside bars? Because it's very rare to have a double inside day. Thus, we can expect the range to expand on day 2. Okay, and those that have been following me for a long time, you guys know when I call an inside bar on the daily, usually the next day is not going to close with a double inside. It's an easy way to filter through the markets, and its profitable trades can turn into swing plays for huge winners. So, okay, So we had DraftKings, we had this inside bar, and then I have the range drawn right here. So this is the high and this is the low of the range. So what are we going to do now? So now I'm expecting that it's going to break out of this high, it's going to break out of this low. I don't know which one. If I knew which one, then I would be rich. Okay, I don't know which one, but I'm going to read the price action. So the first 5-minute bar opens above the close, right? We can see that. The first 5-minute bar is above the close. So that's giving me confirmation that the bulls are in control so far. It doesn't mean it's going to work all the time, but it's giving me an edge. All we're looking for is an edge. So the DraftKings, the first 5-minute bar opened above the close. So this is what I did. I took the Fibonacci. I took it from the high of the closing bar, like so. And then I brought it to the high of the first 5-minute bar. Let me adjust that like that. And then I took so let me get rid of the 450 here. So I took a long entry on the 618. Okay. Why the 618? Because God created the 618. Very simple. That's all you guys need to know. The 618 is a natural pattern that occurs in nature. It's the golden ratio. That's why I take the 618. Very simple. So I went long on the 618 and I put my stop a little bit below the close. So here is the close. I took it and I put it like right here. Okay. So I was so shocked. Within 5 minutes, this thing was just ripping, right? And I was like, man, like my plan was that this thing is going to consolidate for a little bit and then it's going to rip up and then I'll be able to trail my stop, blah, blah, blah. All the good stuff, right? Within 5 minutes, this thing just ripped. And because it ripped, I kind of panicked and I took off 50% at 51. Because the reason why is because I'm using the harmony 618 retracement to 618 target. So that's why I took off half there. So I took off half right away. I got about 2.85 R. That's pretty good. So I risked $100 right there. I locked in about $91 or $95. So I was already good on the day. I was already happy. I made my money. The next thing that I did is I took my stop loss and I put it below the low of this 5-minute bar. And I got fucked because of that. The next bar came, poked out my stop, and then it just ripped. And I look back on this, I was like, man, I could have played this shit better. I should have put my stop loss at break even and just let it go. But nonetheless, I was still able to get away with about 2 times my risk. So I was very, very happy because if you can make 2 times your risk, like we showed in the chart, you only need to be right about 34% of the time. So, hey, I still did pretty well, but looking back, I could have done a lot better. But hey, that's a part of trading. Okay. So the next setup that came, so those who know me, I like to trade for the first hour or hour and a half of the day and I'm done. So I'm not around, later in the day. And I'm primarily trading ES futures anyways. But I did want to point this out for those that are willing to learn. If we take the Fibonacci from the low to the high, we have a great retracement back down here to the 618 area. And we just ripped and we traded to the 10% target. And for those who purchased my book, you know the importance of the 10% target. You guys know how important that is. And that comes from all of my back testing. I give you guys that 10% level for free. You're not going to see anybody talking about the 10%. I created that shit. Okay. That's why we had this big rejection at the 10%. So we pulled to the 618, traded to the 10%, and we rolled over. Okay. So for those that are trading a reversal trade of trading, what you can do is you can short at the 10%. You can put a stop up here above the 50 to give you a little bit of comfort. And you can take off profits at 1.5 or at 2 or however you see fit. So I'm showing you guys all the opportunities that were there. So that was it. So on Friday, I took DraftKings and I was pretty happy about that. And I called it a day after that. I was good to go. I made my money and that was it. All right. So that's looking at day trading recaps. That's looking at how I use the inside bar scanner to find good opportunities. And let's see, before we get into the chart request, let's look at what we have on the list for good inside bars on the daily chart. So let's see what we got here. So, okay, this is not daily chart. Purple, is it purple? Yes, it's purple, okay? So the purple list here, so Snap, BBUI, what the hell is this? Bed Bath & Beyond, Caesars Entertainment, and Oracle. These are the 4 that I put on the list for stuff that I'm looking forward to trade tomorrow as a day trade. And how we're going to do this, we're going to do this together. So let me get rid of all these lines here. So what we're going to do here is we're going to take this, we're going to put it at the high, and we're going to take this and put it at the low. And then we're going to, let me scroll down to a 5-minute chart so we can get it exactly correct. Okay, so boom. So we're going to put this here. So the high is up here, and then the low is down here. Okay, so what I'm looking for Caesars, what is this? No, this is Snap. What I'm looking for Snap is we had this this high over here, we had this retest, and we can't make a new high for some reason. There's a bunch of shorts that are just here. Okay, so what I'm looking for Snap is if we can gap up tomorrow and we can break through this high, I'm long. Okay, I'm long. I want to break through this high, this wick that's been here for some reason. There's a lot of shorts in this game. So I'm looking for the breakup above this high, and that's how I'm going to play Snap. Okay, so I'm going to do the same thing for the next 4, but we're not going to spend time going through it here. But basically, when I put the scanner out for you guys with the inside bar daily charts, we're looking for the open. You need to look at the open. The open is the most important thing. Okay, the open. Look for the open. Where does it open? If it opens up here, we have a gap up. We have bullish momentum. We can expect that we can break through this high. If we open down here, we have bearish momentum. If we open right here, we have zero momentum. Okay. If we open right here, I don't give a shit. I don't want to be a part of this because there's no momentum. I want to be involved in this thing if we can open up, gapping up. And if we can gap up, I'm going to play the fibs. I'm going to put a stop loss down here and I'm going to ride it up. Right? So hopefully that makes sense. So let's go through the requests, and feel free to post more requests in here for me. So we're gonna start off with my man Shop Trader right here. This guy has been around for a while, and you know, I'm gonna do him up well. Okay. So MU, I already talked about MU. So I should have taken my 4-hour target on MU, but I messed up. Okay, I'm gonna be honest with you guys on that. Now, if we look at the daily chart, now I'm nervous. I'm nervous. I don't know what's gonna happen, but you know what? I'm gonna put my stop loss to break even. If this thing comes and stops me out, it is what it is. I'm gonna have a learning experience from that. I'm gonna move on. But this candle is a nasty candle. It's a nasty bearish candle. So if we're a bull, what we need to see is we need to see some basing. We need to see some basing in this area to protect our position. Otherwise, we can have some follow through back down to the downside. So that's what I see for MU. Let's look at PLTR. So PLTR was another one of the another one of the stocks that pulled up on my scanner. So here it was, PLTR. I pointed this out. Do I need to show you guys this on the Twitter? Do you guys trust me? Let me know. You guys believe me, or I gotta show you that I actually called this out? Okay, I'm gonna show you guys. All right, so I'm gonna show you guys. And then after that, you guys got to trust me. All right. I'm not here to bullshit you guys. But anyways, so let me show you that I called PLTR on the scanner. Where the hell is this? So this was like 2 days ago. All right. So here. Top day for Friday. So this was Thursday. So I got to go back in time a little bit. One sec, guys. I just want to show you guys that I'm not bullshitting you guys. Man, I have no reason to bullshit you guys. You know, I really don't have a reason to bullshit you guys. I just want to show you guys that I'm here to help you guys. Here it is. Okay. Here's PLTR. So PLTR was my hot inside bar pick, and this was on the 6th. Okay. So this range right here was an inside range. Okay. So let me get rid of this. Okay. All we have to do is look. Sorry, the range was here. Sorry. I went a little bit too far. Okay. So if we look to the left, right here, this range was within the previous day's range. So this is what we call an inside bar. This means that on the daily chart, this candle is going to close within this range. So the play that I called out for PLTR is like, okay, you know what? It's closing in an inside range. Let's look at the gap. So what happens on the gap? The gap is a gap up, right? We can see that it opened up here. So the play on PLTR here was taking the Fibonacci from the closing bar's high up to that first 5-minute bar, and it's the same thing. Entry on the 618, stop below here. Or if you're very aggressive, stop below the 786. But if you put your stop loss below the closing bar, you have a little bit more cushion. So this one, what happened? we fill the gap 618 and then we ripped, right? And then the next day we continue. So this is what I mean by using the scanner to get into a good day trade that becomes a good swing trade. Okay, that's the whole point. So now let's mark this up together. Okay, so let's do this. Okay, so let's say we went long on a 618 like this, and let's just say we had balls and we went short, or we put a stop loss below 786. Okay, so let's talk about this. So the first thing you have to do is you got to take some profits. Okay, we're not greedy. Okay, so the 618 extension, you go 618 to 618. We're gonna take half the position off. Okay, just trust me on this. You're gonna thank me later. And then the next thing that you want to do is you want to move your stop loss to break even, and then you just let this shit go however far it wants to go. Okay, so if you let this thing go into the next day, that's almost 30R. Do you guys know what 30R means? 30R is what hedge funds look for the whole fucking year. You're going to get that in one damn trade. So if you're risking $1,000, 30R means $30,000. That's simple. Okay. Obviously, I don't know. I don't know how you're going to do it, whatever. I'm showing you the setups. You manage it the way you want to. Okay. I'm showing you the setups. But let's just say you're a god and you said, hey, you know what? I'm going to get out right here because I see this, whatever. I see this inverted hammer, whatever, and you take it off. Let's just say, conservatively speaking, let's just say you trail this bar, you trail here, you trail here, you trail this big bar right here. That's still 21R. 21R on $1,000 risk is $21,000. Very, very simple. Okay, so that's how you trade it. So we had the inside bar. The reason why I look for inside bars is because the inside bar is signaling to me that this stock has been in a damn consolidation and this stock wants to break out. You guys follow me with that? Very simple. If it consolidated yesterday, eventually it's going to break up because somebody is going to be trapped. Okay? So let me ask you guys a question. If we look at who's trapped, who do you think is trapped on this inside day here? So this is the inside day. This is the next day. Who is trapped here? Okay. So put the comments in there. I'm gonna speak about it, but I want to see who got it right. The person that is trapped here is shorts. Why? Because we had the shorts here. 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 You guys see the wicks? Wick, 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 wick. So what happens when we open here? When we open here, the shorts they're shitting their pants. Okay? This is what I come and I take advantage of. I wait for the shorts to be trapped, for the bulls to be trapped, and then I show up to the party and I take their money. Okay? So let me repeat that. The inside bar on the daily chart is able to take advantage of trap traders. And the most powerful strategy that you can have in this game is taking advantage of trap traders, because when they get stopped out, you are making money. You guys understand that? So let's look at the chart. So we have shorts here, we have shorts here, we have shorts here. So we open here and the shorts tried again. The shorts tried again. Don't get me wrong. They're like, you know what? Yeah, you know, I shorted up here. I'm gonna short here too. That's pretty good. And then what happens when the next candle comes in? Bam! Right here, they're scared. Right here, they're scared. Right here, they're scared. And then that's it. Boom! We're up here. That's what we call a short squeeze. And that's what you got to be looking for. That's why I give you guys the inside bars. I give you guys the inside bars because you need to be able to identify who's trapped and you need to be able to exploit that. That's what trading is about. Okay? So let's just say, you know what? You got 30R on this trade. Okay? If you got 30R on this trade, you could lose for the next 4 months. You still make money. Right? Because when you lose, you're going to lose minus 1R. When you win, you win 30R, congratulations. Wait for short bulls to trap and take the gap up down for good R&R. Yeah, exactly. Read the damn price action. TOS scanner. So Daniel, email, I'll email you it. It's like this script. So it's a little bit complicated. So it's going to be hard to explain on the stream, but I'll email you the details. But anyways, so what I want you to do is I want you to be able to always ask yourself who the hell is trapped, and I want you to take advantage of that. Okay? That's it. That's what trading is about. Trading is not about beautiful price action, Elliott wave 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, A, B, C, D, L, M, N, O, P. It's not about that. Trading is about who's getting fucked and how can I take advantage of that. All right? Okay, good. So I know I need to talk about the chart requests, but before I get to the chart request, let's talk about SPY. Because you guys know SPY is my bread and butter. That's where I make my money. So the reason I want to talk about SPY is because I don't get enough credit for this. I really don't. And I need to talk to you guys about it. I need to go show you guys the opportunities because all the other guys that are deleting their tweets are getting respect and I ain't getting nothing. So I want to prove myself to you guys. All right. So the first thing that I talk about is the opening range breakout. Correct? You guys know I made a video. Let's find the video. Opening range breakout. Here we go. So this is the damn video right here. Opening range breakout. All right. Welcome. So watch this video. Okay, you see why it has 32 likes and 0 dislikes? Because I'm teaching you guys the secrets. That's why. Okay, so watch the opening range breakout video if you haven't. But what do I say about the opening range breakout? I say, okay, if we have an instance where we're gapping up above the previous day's range, so let's draw the previous day's range. So here's the low. I'm gonna do something for you guys about the scanner. Trust me, I'm gonna do something. Just give me some time. Because I want to put it in because the scanner is going to give you 3 or 4, 500 stocks, but I still have to go through that 3 or 4, 500 list, and I have to be able to find the best stocks for you guys. I give you guys 5 stocks, but that's after I've already went through like 300 stocks, right? So I don't want to just give you the scanner because it's going to give you a lot of bullshit. I want to be able to show you guys my process, right? How many bears tonight? You're killing me. So unfortunately, I stopped drinking beer because I don't know. I like red wine for some reason. I don't know. Since I've become more into the corporate world, everybody drinks wine. Nobody drinks beer anymore. So I'm drinking wine, and apparently it's healthy. So if it's healthy, that's better for me. But anyways, back to this, right? The opening range breakout. So here's the previous day's low, here's the previous day's high. So can you all agree with me that the open was above the previous day's high and low? Right? Very simple. The open was here, we're above the previous day's high and low. Anytime we have a gap in the market, we can use the opening range breakout. Okay? So with the opening range breakout, all we have to do is we have to take the opening range breakout. So wherever it breaks, is it break to the downside or does it break to the upside? Okay? So very simply here, if we look on SPY, the first 5-minute bar just broke to the downside. So the way that we take this setup is we take a short or long, depending on when it breaks out, and then we put a stop on the other side. And look at this right here. What is that? 10R. Okay? So what you can do is you can say, okay, I'm going to take opening range breakout. I'm going to go for 5R. That's it. If you go for 5R on an opening range breakout and you hit it 2 or 3 times a month, you're going to make money. That's it. But the problem is nobody wants to put in the damn time to go and test it like me. Where's my testing? Find some of this testing here for you guys. Look at this. See that? That's what I mean when I say back testing. How much are you going to do this? How much of you are going to do this? That's the question. If you ain't going to do that, don't expect to make money. So it's very, very simple. All you got to do is take the opening range breakout, go back in time and test it. Every time there's a gap up, every time there's a gap down, what's the success rate on the opening range breakout? What are the targets I need to go for? Where does my stop loss need to be? And just do it. That's it. Okay? Because the statistics in the past is what's going to repeat itself in the future. Okay? So anyway, so the opening range breakout here, that was 10R, right? So I know you guys love options. So imagine if you took options here. Okay, I don't play options, but what the hell would the option be? If you bought same day expiry options here, forget about it. Maybe 5 times your money, 10 times your money, I don't know. You know, I rather trade the futures contracts. But anyways, that's an example of the opening range breakout, right? So that's Monday. Let's go to Tuesday. So here's Tuesday. So let's do the same bullshit again. Let's take the opening range breakout again. So we go long above the high right here. We'll put a stop on below the low like this. Does this work? Does this work? Does that work? Yes, it does. Look at that. Look at that. You don't have to be a rocket scientist to make money in trading. You just have to be consistent. Okay? If you're consistent, you're going to make money. If you're jumping from this person to that person because they're all talking about Lamborghinis and they're all talking about naked women, you ain't going to make money. You have to be consistent with what the hell you do. So here's that. All right. So if we hit opening range breakout here, we hit opening range breakout here, we're making money, we're laughing. But what about Wednesday? What about Wednesday? You know what? There's no way that on Wednesday this thing is gonna work too. It's impossible. Let's look at it. We had this opening range right here. We had the breakout to the upside. Did that work? Man, it worked. That's crazy. That's crazy. So we made 5R here, we made 5R here, we made 5R here, that's 15. So let's say let's say our R is 1,000, that's 15 grand. On an opening range breakout, guess what, guys? I'm not showing you any volume bullshit. Single print, double print, triple print, quadruple print, this, that, inventory, this, blah, blah, blah. I'm teaching you something that anybody can do, opening range breakout. That's it. But you know what the difference is between successful and failure traders is the failure traders, when it doesn't work, they're going to go cry. They're going to go find a new guru, furu, etc. But if you have the balls to sit here and take the setups as they come because you have the back-tested results on your strategy, you're going to make money. All right? All right. So now I'm going to go to Thursday. There's no way that this thing is going to work 4 days in a row, right? There's no way. All right, so let's do the breakout here. Let's see what we get. So I'll take the opening range breakout. Put the high right there. I'm going to get in right above this high. I'm going to put a stop loss right below this low. This. Put it a little bit lower. Hold on a second. What? No, there's an error on this chart. This thing made money again? No, I don't believe it. You guys see that? You guys see that? Any dumbass can come to this market and say, I'm going to trade opening range breakout and make money. But you know, that dumbass, if they're consistent, they're going to make money. Right? And then on the 5th day, we don't have a real opening range breakout. The 5th day, the first 5-minute bar, the second bar is an inside bar. So really, in that case, the opening range doesn't break out. So depending on what you want to do, you want to trade the inside bar, you don't want to trade the inside bar, it's up to you. But if you look at all the other days, the first 5-minute bar got taken out. Okay? So a good trader who have traded inside, let's say they traded opening range breakout for the whole week, let's say they're up 20R. They're good for the month. They can take a vacation. Do you know what 20R means? Let's talk about what 20R means. Say you have 100K, right? So let's say you are risking 2% on a trade. What's 2% of 100K? That's $2,000, okay? So if you make 20R, you make 40 grand. You make 40 grand on 100K. That's 40% return. You don't need to trade for the rest of the damn year. Okay? You don't. You already beat the market. You beat every hedge fund. You beat every bullshit out there. Right? So what I'm saying is that have a strategy and follow it. I'm not telling you opening range breakout is going to work next week. I don't know. If I knew, I wouldn't be here. I would be on a yacht somewhere. Actually, I would be here because I want to help you guys. But what the point is you have a strategy and you follow it. So if any of you are in the chat right now and you don't have a strategy, then what are you doing? Why are you trading? Do you want to just lose your money? What is your strategy? Tell me what is your strategy? Where is your stop loss? Where is your target? Are you trading gap up? Are you trading gap down? Are you trading inside bar? Are you trading 618? Are you trading? What are you doing? If you cannot explain to me what you are doing, then leave the market, because you're going to lose your money. And I'm telling you that as a friend, because I've lost my money before. All right. So we set the limit at 618, otherwise it could be reversal, correct? So it depends. It depends where we get, if we gap up, if we gap down, if we open inside. It depends on the stock. Every stock that I trade, I do a little back test to see if the 618 is the sweet spot. Sometimes it's not going to be the 618. Sometimes it's going to be the 50% retracement. Sometimes the Fibonacci doesn't work at all. So you got to do a little bit of due diligence, and you have to be able to test the stock to see if it's going to work in terms of the fibs, because not all stocks are algorithm based. Some are bullshit based, and the ones that are bullshit based, you don't want to deal with them. Okay. All right. Let me get to the damn chart request because I've been going overboard here. All right. So let's go back to the chart request. So we did MU, we did PLTR. Let's see what else we got here. All right. I'm honestly, guys, I'm sorry if I'm going overboard here. I honestly thought this was going to be done in 30 minutes, but obviously that's not the case. All right, so KR. So let's start off with the weekly. Okay. The weekly is always the most important. So the first thing is we found rejection at the mid-Bollinger Band. So that is a textbook sign of algorithms trading, because they use the 20 EMA as their area, right? So we got a rejection right here. Let's go to the daily chart. Let's see what's going on here. Yep. So we have wick, we have wick. So the case for the bulls is very clear. We touch the mid band on the daily and we bounce. So in order for the bulls to continue higher, we need to break through this high, and then we need to break through these wicks. Otherwise, if we start to break down here, we can retest these lows. Very simple. Okay, let's move on to the next one. MRNA. What is that? MRNA. So again, we're going to start off with the weekly. So here is a nice inside bar close. So this is a very, very good play. When we have the inside bar close, thank you very much, Herman, by the way, I appreciate that. What I like to do with the inside bar close is I like to bracket the candle and say, okay, if we break to the upside, I want to go long. If we break to the downside, I want to go short. So if we can look at the previous inside bar here and this one, when we broke to the downside, we had a nice push down. When we broke to the upside, we had a nice squeeze up. That's it. Very simple. I'm not here to present some bullshit to you guys. Okay, I'm here to present something that makes sense. Okay, so thanks, Todd. Enjoy the rest of your day. You can always watch the video. But anyways, so we're gonna bracket. If you want to play this, you want to bracket this candle, and you want to see what's gonna happen. For me personally, I like the upside more to this, because this thing is obviously in an uptrend and is very close to the mid Bollinger Band, and we had 1, 2, 3 weeks of selling. So if we can get back above here, that's a good sign. And that's actually the same setup that I'm taking at Walmart right now. So I'll talk to you guys about that one later. I'm on the right thing here. Okay, CGC. Man, I had some good times with CGC back in the day, man. But that's CGC, I had some good times with this stock back in the day. So when I was, let's see if I can find where I got in on CGC. Let me see if I can find it for you guys. Let's see. Honestly, looking at this chart, I can't even remember. It was before this, because this is when they got acquired by whatever that company is called, Constellation Brands. Yes. So I got it in somewhere here on CGC. I sold it up here, and then I re-entered over here, got out somewhere over here, and then somebody was posting like, man, this is the best head and shoulders pattern in the world. We got the head, we got the shoulder, something like that. Well, I got out of this thing because I made my money and I was happy to take my money. And the thing with these wheat stocks is they're very, very volatile. So you gotta be careful. So let's see where we are right now. Let's go to the weekly chart first. So you know what? CGC has found the bottom here, right? What is this bottom? What do you guys think? What fib is that? What fib is that? Let's see. 618. Let's see what we got. No, I was wrong. That's deep. That's a deep retracement. So that's the eight. That is basically the last line of defense for the bulls. So this 886 area right here is the last line of defense, because usually when this 886 breaks through convincingly, we're usually going to break this swing low. So, the bulls stepped in the last possible moment and they drove this market up. And then if we draw the most recent Fibonacci, we can go from low to high right here. And then we can see, look at that. That's a 618. Beautiful. See that? Look at that. It's like art, right? So if you guys don't believe in fibs, look at this damn chart right here. Okay. So we had that push up, we had to pull back to the 618, and we traded to the targets. So you know what? It's dangerous to be a bull right now because we traded to the targets. All the bulls were here. All the good bulls were here. So when we trade up here, you got to be careful. You have to be very, very careful. So what I can see here happening is, let me also draw the short. So what I can see happening here is we possibly pull back to this 50 to the 618, and then we get some rejection. There's going to be a battle. It's not going to go vertically up. Usually, I don't know, but usually it's not, because anyone that's shorting up here, they're going to be adding to their short in this zone. So what we can see here is possibly a little bit more consolidation. Let this mid Bollinger Band pull in a little bit more so that it can provide some support, maybe a little push up higher. And then over here in this zone is going to be the real important area. Are the shorts willing to short one more time and try to push CGC down? Or is the bulls going to be stronger this time? So that's what we have to play out and see. But if you were a bull, you should have been a bull here. Okay, you shouldn't be a bull up here. You should be a bull here. Okay. All right, CRM. What's going on with this bad boy? So I pointed out CRM a long time ago. When Trader Stewie got stopped out, that's when I said to go long. Because this area here is a value area for the bulls. Right here between the 886 and the 786 is a good area to go long, because we have a big bull bar here. If this big bull bar gets taken out, there's going to be a stop loss flush. So that's why I'm saying, you know what? Try over here, build a little position, see what can happen. If you get stopped out, your max stop loss should be right here below 205. And, it is what it is. So if you want to be bull, this is a good area to be bull and see what happens. And then you got your stop loss over here. But right now, from what I see from this chart, we're just basing. So there's nothing really to talk about there. Pins. Yeah, nothing that I'm interested in, to be honest. There's no inside bar setup. There's nothing really happening. We're going vertical, but I don't like to buy at highs. I like to either pull back to the mid Bollinger Band or pull back to Fibonacci level. But that's it. I don't like to buy at highs. That's my personal preference. Win. So here, you know what? This thing is in a downtrend, very obviously, right? Let's draw this trend line here. I know everybody likes trend lines, so let's draw one. Something like this. So, there's a little bit more room to the upside here, but personally, I don't want to go long on a stock that's in a downtrend, very simply. Keep it very simple. If the stock is in a downtrend, if you look at the bigger picture, this thing is in a downtrend, I'd rather be short. So, if you're long, not really interested. XLU. Over here, this is a nice trap candle. We call it a trap because you can see here that the shorts were trying to short below here, and we did push down here, but immediately we got turned up on a hammer. And I like the position of this because it's right at the mid Bollinger Band. This is a very good possible play for the long side. If we go long right above here, stop below here, and get a pullback at least up to this level here, potentially this could be the low for 2021. This could be the low, because just look at this thing, boom, 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 right? So that could be the low of 2021. So we don't know, but hey, it's good risk to reward. So Snap, like I told you guys, is on the radar right now because we have that daily chart. If we look at the daily chart closed with an inside bar on Snap. So I'm going to be paying very, very close attention to it tomorrow. If we open up here, I can look for a gap fill. If we open down here, I can look for a reversal or continuation short. If we open right here, I won't be interested. Okay, net. I don't know what this is. That's net. Cloudflare. So the weekly looks really good in terms of the bullish. And, I pointed this one out a long time ago because people asked me. We pull back to the 382 and now we're trading to extensions. Whenever we trade to extensions, I'm very cautious. What I like about net here, the buying play was right here, down here. We pulled back outside the Bollinger Band, and then we had this nice doji. That was the first buying play. Now, this is a rejection play because if we draw the Fibonacci from the high to the low right here, we're on the 618. Very simple. I could just see that. So you know what? The shorts are piling on, and the shorts want to look for a leg back down to $66, $64. If we can get back down here, this will be a very good buying opportunity for a reversal play. If we can pull back maybe here and then break through this high, that's going to be very bullish. But you guys can see the shorts are right there. They're right there. They're waiting right there. They shorted, and then they're waiting to see the outcome. NIO. So NIO was one of them that I called out on the day trade. NIO, so I pointed this out here when we had this inside bar, that it was a very good play. So here was the previous day's high, and basically we gapped up above that high, and then we had such a beautiful pullback right here. If we take the Fibonacci from the high of the closing bar, or you could take it from the high of the previous day like this. Look at that. Look at that. Is that magic? Man, that's beautiful. Look at that. That is beautiful. I love it. I absolutely love that. This is why I trade. If shit like this didn't happen, I wouldn't trade because it's not going to be worth my time because there's no advantage. Here's the damn advantage. I'm showing it to you guys. You take the previous day's high, you take it back up to this gap fill here. We pull to the 618 and we rip. So how you can play this, you're long on the 618. You can put a stop at the 886. You can put a stop at the 786. You can put a stop below the closing bar, whatever you want to do. It depends on if you want to be more conservative or if you want to be more aggressive, all right? So that one was a beautiful trade. And then if we take the fib from the low to the high like this, we have a nice, very close to the 786 right there. That's a beautiful one. And then if we take another one from the low to the high here, we had a double bottom, basically, an attempt to break through this low, and we never did. So that's another good setup there. So, you know, NEO is looking very bullish, especially since we gapped up above this previous range here. You know what? It's in a new all-time new high. So anytime you're in an all-time new high, we can just rip, right? There's no resistance above. Is there any resistance? No. So the sky is the limit. What we do here is if you want to be conservative, you want to be watching the previous day's lows. If the previous day's low gets taken out the next day, then that's a very bearish sign. So that's what we want to keep an eye on. KHC. So this is one that I also pointed out on the scanner. So we had a double inside week on KHC, and this is something that I pointed out. So let's see how we could have traded KHC on a 5-minute chart. Okay, so what could we have done here? So we knew that the range was here. So let me draw the line here. So this was the low of the double inside range. So how do we trade this? So we gap down and we push down. So what we know if we gap down is we know that this here, the previous day's close, is going to be a resistance. Okay, so what we can do here is we can draw the Fibonacci from the close to the low like that, and there's a 786 right there. Okay, so that's how you can short this. You can put a stop, you can short rate 786, stop above the high. You have to take profits, obviously, and then this thing rips. If you're playing to the long side, you take the Fibonacci from the low to the high like this, and you, as long as you get in on any one of these fibs and you put your stop loss below the swing low, you're able to make some money. Okay. Apple and Facebook. Sorry guys, I know I'm overboard here. Sorry, an hour. So apologize for that. I went on a bit of a rant. So with Apple right now on the weekly chart, so we had this inverted hammer the previous week, and then now we're closing with a hammer. So this is basically, if you combine these two candles, we have a doji. So there's a lot of indecision. The bulls and the bears are both showing up to the market. So what I want to see here is I want to take the range. So I want to take the low and I want to take the high like this, and I want to be watching this range. Whatever it gives on this range should likely have follow through. Okay, Facebook. Go back to the weekly. So I've been looking at Facebook for a long time. So I first was interested in Facebook right here on this inside bar, and we did have a follow through up. And just like Amazon, we had the follow through up, and you were able to make money on the follow through up. If you were doing options or whatever the hell you were doing, you're still able to make money on the spot. But we got rejected, and you know, for me, that is not a good sign, because I want to see follow through. Otherwise, what's the point of, I rather put my money in something else, because if you're gonna just do this bunch of choppy bullshit, I'm gonna put my money somewhere else. Anyways, we had this double inside bar. The long was right above this high. We had a pop through. That's 1-to-1. That's 1-to-1 risk to reward. Okay. But that's it. That's all you can get. And now I had this triangle drawn for a long time. And as you can see, we're just getting tighter and tighter and tighter. And then here we have a clear bear trap. We have some bears that's shorted here and we turn into a hammer. So that's something to pay attention to. But the main thing in trading is put your bets across multiple things, because you never know what's going to happen, right? So here is INFY. So if you're extremely bullish on this stock, all you do is you buy every single dip with a stop loss below this low. Very simple. Okay, that's all you got to do if you're bullish. If you're bearish, then you got to wait for some kind of price action pattern. Otherwise, you're just wasting your time. Let's look at this AZZ. I don't know what the hell this is, but you can clearly see we're up against some resistance here. 1, 2, 3, 4. We have this doji here. I'm not interested in anything here because we're at an area of resistance. So I want to see how this thing plays out. If we can pull back to this mid-Bollinger Band here, that'll give me some confirmation that I want to go long. Otherwise, I don't care. So INFO. So this one, the play already happened. We pulled back. So this is the same play that I'm looking for on Walmart. We had 1, 2, 3, 4 red candles in a row, pulling back to the mid-Bollinger Band. And then we had a pop. So this is the play. So if we go to Walmart, that's W. That's not Walmart. We go to Walmart here. This is the play that I'm in right now. Is I went long right above this doji here, a little bit below, and then a stop here. And I'm up a little bit, but I was hoping I was going to see more follow through. But this is the same play. This is a textbook play. We pull back to the mid Bollinger Band, 1, 2, 3, 4 red candles. We have a consolidation, then we have a breakout. So that's what I'm looking for. So hopefully it works out. If it doesn't work out, I'm on to the next. Then XNET. What the hell is this? I'm not interested in this. What is this? $4, $3? Forget about it. It's not worth your time, guys. Why? Why would you put your money in that? Look at this manipulation. Look at this wick. What is the percentage on this wick down? Let's see, this one here. That's 30% down. What's this wick? 25% down. Why would you want to put your money in this? There's no reason to. This is gambling. I'm not interested. I'd rather you guys put your money on a real stock. Okay, don't waste your money on stocks below $10. Forget about it. All the other bullshit people out there are gonna tell you, oh yeah, penny stock, blah 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 blah. I'm telling you the truth. Do not put your money in stocks sub $10. You're gonna get destroyed. Because when it gaps in the wrong direction and you're on the wrong side of it, you're gonna lose a lot of money. So don't do it. Corsair Gaming. So we have a nice bull flag here. Let's draw the flag together. We take this trend line right here. Yeah, right there. Boom. So, man, this thing doesn't want to stay on the line. Okay, right there. And then we have it here, trend line. Nice. Okay, so that's what we have, this flag. So we have to see, are we going to break to the downside or are we going to break to the upside? If we break to the downside, then we want to take the fib from the low to the high. And then we want to be looking for this area, 618. This is going to be the golden area. So yeah, if it pulls down here, then I'm going to be looking for a buy. If we break out here, we can just go long with a stop loss right here. Yeah, for sub $10, I don't trade it. It's up to you. I'm not telling you what to do. It's up to you. I don't trade it. It's a waste of my time because it's a lot of manipulation. I rather trade stocks that I can rely on the back testing. And sub $10 is a lot of manipulation. Okay, APPS. This thing is in a bullish uptrend, obviously. So for me to be a buyer, I want to see a pullback to the mid band. You see, every time we pull back to the mid band, boom, we have a nice pop. So I want to see the same pattern. I'm not really interested in being a buyer here unless we can get above these highs. Then I can go for a short-term momentum play. Otherwise than that, I'm not interested. Okay, Walmart. I already talked about Walmart. FSLY. Yeah, so this is actually at a sweet spot right here. I like this. But I pointed this one out a long time ago to, that's why I have this Fibonacci here. We had the 618 had already rejected, and the 618 is pushing down. So because of that, there's shorts in place. So obviously this is going to high risk. It's a high risk, high reward. There are shorts that are here, but based on the close of this week, we can see that there's a potential for shorts to be trapped because we have this hammer candle. So we can potentially break through above here. If we break above the 618, I'm expecting a nice little squeeze. When can we short run? It runs like crazy. It depends. It depends on the stock. But whatever you do, make sure you have good risk management, right? So if you're taking a short run, make sure that you're not risking more than 2% of your capital, because if it doesn't work out, you're going to be in trouble. If it does work out, you look like a genius, right? But if it doesn't work out, you're in general. I mean, you're in danger. Anyways, QS, quantum space. Take the Fibonacci from the exact low to the high. We're hanging around the 618. This is a pretty decent area to buy. We had a nice little pullback here. If we pull back further, it'll be here to 786 or to the 886. Definitely, if you're long, you're looking for a movement like this, up, pullback, and extension. So not too bad of a spot if you want to take a try at it there, but manage your risk accordingly. What was that? QS, CRM, we did that, and ACB. Did we do? Yeah, we did CRM, ACB, Aurora Cannabis. Same thing. It's the same analysis as everything else. You know, overall, wheat stocks are in a downtrend. Yes, we know we had a big run, but that doesn't mean that it's going to continue. So just be careful with what you do on these wheat stocks. They're very, very volatile and they gap a lot. So personally, for me, I won't be involved in that. Okay. All right. So time is now 9:07. We had a big run here. I got some apple pie that I'm gonna put in the microwave right now, and I'm gonna enjoy that. So appreciate you, you guys that have stuck through the whole hour and 7 minutes. And I tried my best to give you guys a lot of insight that other people won't give to you, because I care about you guys. I want you guys to succeed. If you guys succeed, I succeed, right? We're all connected. Anyone that thinks that other people's failure is going to lead to their success, they're never going to do well. Okay. All right. So thank you very much, guys. And yeah, any other questions, DM me. And looking forward to the rest of the trading week. Let's look at ES one more time before we go. See what's happening over here. Put on to the hourly. Yeah, so, you know, it's pulling back. This 236 area will be a nice little area to buy, potentially. So let's see what we get over there. I like when I have multiple candles of the same color in a row. Anytime we have, look at this one, for example. 1, 2, 3, 4 red candles, doji, and then break. I like when we have multiple candles in a row because the probability is that we're going to change color. Okay, so that's just a color game. We call that the color game. Okay, thank you very much, guys. Appreciate your time. And thanks for joining me Sunday night. And let's look forward to having another great week. I had a great week last week. I want to have a great week this week. Okay, thank you very much. Enjoy the rest of your night.